It's time now for business. Let's say hello to Kate Moody. We began talking about the French president developing COVID. In the U.S., the COVID rates are off the charts, and we're starting to see really it's taking its toll on employment.
Yeah, because more restrictions across the United States means that more companies are letting people go. The weekly jobless numbers have been rising for the past month, and last week, 885,000 new applications for jobless benefits were recorded across the country. It's the highest level since early September, and it's higher than economists had predicted for this week. That data don't take into account the large numbers of people who have stopped looking for work altogether. Now, it does tie in with what we've been hearing from analysts and yesterday from the head of the U.S. Federal Reserve. Unemployment is likely to remain elevated for quite some time, although there's been some recovery, a significant recovery really, since that peak of layoffs that we saw back in March. The labor market will remain weak until vaccines are distributed widely or the pandemic is brought under control. Over 20 million people in the U.S. are currently receiving some form of unemployment benefits. More than half of them could lose that aid in just 2 weeks' time if Congress doesn't extend some of its emergency support programs, which included more generous coverage and also eligibility for self-employed and gig economy workers who aren't usually eligible for those benefits.
And so all eyes turn to Capitol Hill in the U.S., where they're trying to get to that stimulus package. Republicans and Democrats still at odds?
Yeah, with the clock ticking to that December 31st deadline when a lot of those emergency programs will run out, Congress has been haggling over the details for months, really, although we've seen some signs of progress in recent weeks. There is now this week growing bipartisan support for a package which would total around $900 billion. It's a bit closer to the $500 billion that had been proposed by Republicans than the $2.4 trillion package which was supported by Democrats. Now, the legislation itself has yet to be published, but it appears to include an extension of some of those key jobless benefits, which would be enhanced by about $300 per week. It includes direct stimulus checks for struggling families and funding for the distribution of COVID vaccines, among a lot of other elements. Two of the most contentious issues that continue to divide lawmakers, largely along party lines, are out of this legislation. That includes additional aid for state and local governments, which is supported by most Democrats, and liability protection for businesses, which is a top priority for Republicans. So that's sort of what we know about the relief package that's likely to emerge here. We know also that the incoming Biden administration is working on its own stimulus package for 2021 and beyond. Now, if all that wasn't complicated enough, Congress also needs to approve a government spending plan for next year, or the government will run out of funding and have to shut down at midnight this Friday. Now, that deadline could be pushed back by a few days, as indeed it was last week, just to buy some more time. But a longer-term budget really does need to be approved, and so that's likely to be coupled with this relief funding, which is so desperately needed by a growing number of American households and businesses. These negotiations continue on Capitol Hill, but we are expecting some kind of announcement in the coming days, if not hours.
And Kate, a word on the markets?
Well, Wall Street is trending higher, closely watching all those developments there, as we are as well. After a more muted Wednesday session, the S&P 500 and NASDAQ have each hit new record highs today. Markets have fairly consistently shrugged off the weekly unemployment reports. Investors much more focused on the prospect of fiscal stimulus there. We saw another mixed close for the major European indices. The DAX outperforming once again in Frankfurt, climbing 0.75%. The CAC 40 nearly flat in Paris. The FTSE 100 down slightly in London. The Bank of England today did say it would be keeping its interest rate and asset buying program steady for the time being. Now, a stronger pound put some pressure on stocks in London. The currency gained back a bit of ground as those Brexit talks grind on over in Brussels. The pound is trading at about $1.36 at the moment. That's higher than it's been in weeks, although we know it's been skewed by a weakening dollar. The U.S. currency itself has been softening in recent days. The pound worth about €1.10 this hour. And again, this is a real key bellwether of how investors feel about Brexit. And it's where we see the first market reaction, really, to any headlines about those future ties between the UK and EU.
I will be waiting for some white smoke on that one.